Hello, welcome to the European Open briefing for Thursday, July the 12th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So we've got quite a strong turnaround in risk sentiment this morning. Yesterday we had that news that the US is planning on imposing additional tariffs of up to $200 billion on Chinese imports. So that had led to a sharp sell-off in global equities, as well as put heavy downside pressure on commodity-linked and emerging market currencies. But since then we've had reports that the US and China are now ready to resume trade talks. That has boosted risk appetite this morning. We're seeing Chinese stocks close up by 2%. We also have European bourses opening relatively strong this morning. We're also seeing a rebound in risk-sensitive currencies such as the Aussie and the Kiwi. The Aussie had fallen to 1.5-week lows yesterday. It's up by around 0.3% against the US dollar this morning at around 0.7388 at the moment. The dollar, though, does remain broadly strong despite that slight rebound in other currencies. Dollar index is more or less flat, but against the yen, we can see dollar yen is currently trading above the 112 level, earlier hitting a 6-month high. If you look at European currencies, the stronger dollar is clearly weighing on the euro, and the pound. The euro has fallen back below the $1.17 level. Sterling is around 1.3220 at the moment. We do have the publication of the Brexit white paper coming up later today. We could see therefore some volatility for sterling later on. The Bank of Canada did raise interest rates yesterday, briefly boosting the Canadian dollar, but then we saw a big plunge in oil prices, and we saw the loonie falling to 2-week lows. It is recovering slightly this morning, the loonie up by around 0.1% against the US dollar. Oil prices are also attempting a recovery following that slump yesterday on fears that a trade war would hurt oil demand, plus the news that Libya is resuming oil exports. Gold fell to 1-week lows, weighed by the strong dollar. It is also rebounding this morning, and we can see the main performers here in the chart. WTI up by 0.7% at the moment, followed by Euro Yen, and at the bottom of the table is Dollar CAD. Taking a quick look now at the dollar-yen pair, we can see that surge late yesterday for dollar-yen, breaking above the 112 level. It earlier hit a 6-month high of 112.41. We had stronger than expected producer prices, which hit a 6.5-year high of 3.4% in June. We've got the consumer price index coming up later today. We also heard comments from the Chicago Fed President Charles Evans, who's normally a dovish FOMC member, but in an interview with the Wall Street Journal, he said that the US economy is so strong that businesses and consumers can live with higher rates. That lifted expectations that the Fed would raise rates as many as 4 times this year. We did earlier have unconfirmed reports that the US and China have already had new talks on trade that boosted commodity-linked and emerging market currencies, but those were unconfirmed. What has been confirmed is a Bloomberg report that the US and China have signaled their willingness to resume trade talks. We can see oil prices there yesterday fell on fears that a trade war would hurt demand, but there were other factors creating that big sell-off where we saw Brent crude slumping by 7%, WTI by 5% on Wednesday. OPEC published its monthly report saying that 2019 demand will be lower than its previous forecasts. Saudi Arabia boosted output in June as was expected, and Libya announced the resumption of exports from key ports which had shut down and had created supply disruptions, plus of course fears that a trade war would hurt demand, all of that creating that sharp sell-off. Though WTI managed to stay just about the $70 a barrel level, it's currently trading around 70.70. And a quick look at sterling, because we do have that all-important white paper on the government's plans on how it wants to trade with the EU once it's left the bloc. We already saw resignation of 2 cabinet members. More resignations could follow if once those full details are published, it means the hard Brexiteers aren't happy with Prime Minister Theresa May's plans. On the other hand, if we don't see any resignations, that would definitely be positive for sterling. And quick look at today's economic calendar. We're going to the key data later on will be U.S. Consumer Price Index, U.S. inflation, as well as the weekly jobless claims. Plus, we're going to have the ECB meeting minutes at 11:30 GMT. That's it from me. Thank you very much for watching, and have a great day.